Let's very quickly define the trade swing that we expect will unfold or is breaking out. This was early Asia time, and this is today's daily. We were expecting last week, remember, retraction all the way to 1.08 into this ascending triangle, but we have now changed bias because we were seeing a stronger sterling against the dollar, and usually all measures are related in terms of direction towards the dollar. If some are going up, all would go up, but with different strengths. And if all are going down, then all should really be going down. So we believe that we have done a 1 and a 2, we've done a 3. There is a wedge here that we always get to see on all the intermediate and short-term frames. We're doing, this is like 4. It is possible that because this is weaker than the sterling, it gets to do a 4A, a 4B, and a 4C. We get to do a 4A, a 4B right now, and then a 4C before we break out into a 5 when we have a much weaker dollar. It is possible that we break out into 5 right away if we have a stronger sterling, for instance. Usually, like C should be the longest. This is the point. We've been over the labels, of course, several times. That C is valid. We have an A in red, we have a B in red, we have a C in red. All this is a high degree B in green. We're dealing with that high degree A, and there's going to be a high degree C up here. Unless you're seeing an A, B, and a C into B, which is also possible, but unlikely. All right, so we focus on segregation of the 3 to 4 and take a trigger into 5. Trigger into 5 takes us to 113.50, 113.39 is showing here, or 114 at the most. All right, let's take it now to smaller interframes. We're looking at today's 4-hour charts. It's that AB, and we're looking at that C. Again, the target is 113.50 at 138.2. This shows a 1 and a 2, shows a 3. We did a 4A, 4B, and 4C. Is this a motive wave breaking out? That's what we have to look at in more detail. Shows more fractions into the 4 hours. Would look like we have a trigger at that point, meaning we have an internal 1 and a 2 breakout into a 3, even if it is not yet labeled. It will get labeled, I believe, on 30 minutes, but we have an internal 1 and a 2 and a decline. And a breakout higher takes us to 45. And that's what you get, that internal 1 and a 2 is an A and a B, and looks very choppy, of course, into C. Okay, so it would look like an A and a B, it look like a 1 and a 2 before you break out into a 3. The market is probably buying time, that's all. But the trigger is correct. The trigger here on the 4 hours is correct. Even we're not showing it, the trigger is correct. Okay, so we should anyway be prepared for break to the upside, and the best would be to have a buy stop at maybe 112, take it to 113.50, in order not to waste time buying into the market and just staying there, market not moving. But from what you're seeing here, there's a 1 and a 2, there's a 3 and a 4, there's a 5, all the internals are right, 1, 2, 3, 4, and 5. Internals here again, 1, 2, 3, 4, and 5. So 3 is correct, 1 is correct, 5 is correct. A, B, and C, B. This is just wave 1, wave 2, wave 3. We didn't, of course, label the internals. It's an ending diagonal, and it's all an inverted head, double head and shoulders with a neckline at 112. So we can just have a buy stop above 112, take it to 113.50. The hedge is 111, probably 111 at level 3. Over here showing 111.10. Take it to today's 45. This is what we're going to be buying into. Very congested, and again, the best is to have a buy stop. But if you wish to do more internals, and if you're in for trading euro dollar in particular, we have a double inverted head. The shoulder will show again towards the moving average. Right now we're 111.30. We're probably going to get 111. Just buy support 1 on the 15 minutes. We'll give you that shoulder, and the stop is at 110. Or the hedge is at 110 below level 1, and I believe the market resolves to the upside. 112.84, 113, 113.50. We've just seen 113.50 on the daily time frames. Let's take it live. All right, so we're looking at the 1 hour now. Let's take it to 45. That's check momentum on the 2 hours. We may be about to get a trigger, or market's attempting a trigger. On 2 and 4 hours. We're very positive on the day, so we're good. And we're broken now, quite clearly broken out of this wedge. So here's where we get to see negative momentum. No triggers yet. No triggers yet. Well, we have a cycle extreme, so we should be about to reverse. Cycle extreme means a C. We have a trigger here and the same cycle extreme on the 5 minutes. All right, so if you wish to buy it, bear with us a minute. Of course, still a very small trigger, but we can all see this developing, and this becomes a 1 and a 2. It's an ending diagonal, of course. Best to focus on the 4 hours where we have the trigger in the first place. And this is the best because you can see indentation here is higher than indentation level 2. So we just need to have the stop below level 2 or the hedge below level 2 and probably just buy market and be done if you wish to do the trade. Okay, so the entry is 1.1140. The hedge is this point, 110.40, 110.30, 100 points. We attempt to hold it to end of the week. We attempt to hold it to 113.40. We're going to get 113.40 end of the week, I doubt. Unless we see a weaker dollar again. So resistance was 112.60. I believe that's it. That's what we get this week. 112.60. Maybe 113.30 is resistance 3. Remember, we want to go to 113.40. So we'll have to see. A very weak dollar should ensue this week. If we ever get there, that is. All right, we're seeing, of course, inverted head and shoulders. Remember, this is a negative swap trade. So the longer we hold, we have to keep in mind that we are going to be paying interest if you're selling dollar against the euro.